Bitcoin has already seen a correction from the 38k resistance. Will we see this developing weakness continue to develop through the coming week? And could we potentially see Bitcoin fall further? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic start to the week. In today's video, we're going to be taking a look at Bitcoin on the high time frame and the short term, discussing the developing weakness and whether or not this weakness will result in a correction and how low that correction could potentially take Bitcoin. Alongside this, we'll be going over the upcoming CPI data, discussing everything you need to know and so much more. Before we get into it, smash that like button, hit that comment button and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in trading, join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and much, much more. Alongside this, you'll also get access to 6 different group chats. I'll go through them really quickly over here. If you're interested in joining the community of over 620 VIP members, go ahead and contact me in the pinned comment of the free channel. Again, we do have our VIP exclusive trading track record over here. You can go through over 31 months of trading data to look at our win rate, look at the trades we're taking, ECT. Everything is laid out for you. Go ahead and check it out. Let's get into the video, guys, starting on the market data. So how are we looking for today? 24-hour volume is up 53%, and again, that is relatively normal when we're moving into a weekday, out of the weekend, so a pretty big jump up in volume over there. With that increase in volume, we do see an increase in liquidations. Liquidations sitting at 175 million, that is up 54.19%. Looking at those liquidations, a whole heap of those liquidations came from those long positions, as not only Bitcoin, but as you can see over here, a lot of these altcoins of the last 24 hours has actually printed liquidations. Again, seeing some pretty aggressive move toward the downside on the short term for Bitcoin and various altcoins. So a lot of liquidations on the long side of the market in the last 24 hours. Moving back to the data over here, looking at that volatility index, the 30-day volatility index is still consolidating sideways. And again, this is not really what we like to see when the price is moving up. We like to see volatility moving with the price action. When we see volatility dropping down, it can signify we have a discrepancy over here, or that we are at a level of confluence or resistance, which we are at. And the 60-day period, we can also see a very similar thing. The volatility index is moving very slightly downwards as the price action is moving upwards. This is indicative that a large move is brewing. When we see these tight compressions in volatility and the price action deviating from what the volatility is suggesting, when the volatility surges again, we will see a large reaction in price action. So let's go ahead and take a look at the broader markets, and then we'll jump into Bitcoin. So the DXY is holding pretty steady. Now, I don't expect the DXY to be doing too much in the next 12 or so hours leading up to CPI data. Now, CPI data will be actually in a little bit over 13 hours time. If the CPI data comes out bullish, meaning the inflation rate has dropped, okay, month on month year we're dropping in inflation, we will expect the DXY to correct. And if the DXY corrects, we could see the S&P 500 and the Dow Jones continue toward the upside. However, if we see inflation come out bearish, meaning inflation is still on the rise on the short term, we could see the DXY jump up as the probability for a future interest rate hike will begin to rise. If we take a look at inflation to interest rate curve over here, our interest rate trajectory, what we have seen in the last few months is inflation has moved sideways, and in the last 2 months, we have seen inflation move upwards. Looking at interest rates, we have seen interest rates move sideways, and interest rates are lagging to inflation. So if we see inflation take another leg up, we could develop a perceived trajectory of interest rates moving upwards as well. We'll go ahead and put it on the dotted trend line. This over here This perception of potentially future raising interest rates will directly increase the perceived systematic risk in the market, and that will negatively impact the risk, okay? The risk, which is going to be our beta, our risk to our estimated return variables for our assets within the risk asset market. Again, there are elements that can actually move these assets in directions against what the risk of the market is. These will be against societal perspectives, social and governmental policies, economic policies, taxation policies. ETF news is a really, really big one. However, it can still add this overall bearish precedent or bearish notion to the risk asset environment if interest rates continue upwards. Now again, all of this is speculation for now, as we do not know what that inflation data is going to be, but we do know, according to Jerome Powell's speeches, they still want to get inflation down. So raising interest rates in the future could be a possibility. However, I wouldn't be hedging for that as of right now. The data we have, we need to see more rises month on month for inflation before we consider that as a possibility. Something to keep in mind anyway. Let's go ahead and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. So starting on Bitcoin, we're going to be taking a look at this chart over here. This is our high time frame chart. The levels I've gone ahead and indicated are our major resistances and major supports. To actually make this a little bit more clear, let's turn these supports into green bars. So our green levels are our supports. Our red level is of course our resistance. If you take a look at the price action, we have seen a very, very good breakout about 32k. And we saw about an 18% rally since that breakout of 32k all the way up to 38,000. 38,000 is the first major high time frame resistance for Bitcoin between the price range of 32 to 48. I'll say it again. 38 is the first major high time frame resistance between 32 and 48. Therefore, if we are going to see a breakdown or a rejection, we are going to see that develop from this 38k level, the first major high time frame resistance between 32 and 48. If we take a look at the VRPV, we can see the VRPV indicates a nice little bump at this 38 to 40k level, which then proceeds to drop off until around 46 to 48, and we can see from 32 we had this gap filled. If we go back and look at the price action maybe a month ago, we can see the VRPV in this area was not filled. We actually had a bit of a gap over here. And we've said many, many times, if we see a break above 32,000, we are going to see quite a strong move from 32 to 38, where we will bump into a little bit of resistance, potentially consolidate before either continuing through 40 up to 48 or finding a rejection. At the moment, Bitcoin is potentially seeing weakness develop, which will develop into a correction. The big question is, how low can the correction take us? And that is what we'll be taking a look at in the short term. But first and foremost, guys, let's dive down to the daily chart. And we do need to go ahead and kind of orient ourselves a little bit in terms of what is happening with the price action and really focus on the objective facts, because if Bitcoin starts to correct lower, you're going to see a lot of people saying, I told you it was a fake out, we're going to 10K, we're going to go to 15K, and it's just wild how the narratives flip so suddenly in crypto the moment we see a change in trend. But you have to look at the high time frame levels. objectively, we remain macro bullish while 32k holds as a support. So we are macro bullish above 32k. Okay, we are macro bearish below 24.4 to 25.2. Remember, this is our high time frame horizontal range, which we broke out. This was our accumulation. We broke toward the upside. We saw a clean breakout toward our next level of resistance. For us to continue higher now, we need to break above this resistance at 40k prior to breaking back below 32k. So the uptrend we are in will remain a uptrend provided 32k holds. If we lose 32k, we enter a downtrend towards our next level of support, which is 28,000, which is going to be the trigger point for a weekly trend. Okay, now we're layering it. So we have a macro trend, okay, above 32k. Perfect. We have a weekly uptrend above 28k, and we have a macro downtrend below 24 to 25.2. With that weekly uptrend, this acts as a trigger, so a weekly downtrend will also start below 28k, and a monthly downtrend will also start, okay, below 30 in that level. This is going to be that monthly loss. Okay, so let's talk about the possibilities of these levels being lost and what impact these levels could have on the chart. So the most obvious one to start with is going to be that the 40k level. If we break above 40k, that will be the sign that we are going to continue upwards to 48. So what does that mean for you right now? And we'll get into it a little bit more. If you take a look at the total cryptocurrency market cap, if you take a look at the total altcoin market cap, we're at resistance. So yeah, we've seen some great moves on altcoins in the last few days, but if Bitcoin sees a correction here, we're going to likely see altcoins correct quite aggressively, which we've already seen some altcoins correct 15% in the small little blip of correction Bitcoin has had in the last 24 hours. So there is obviously going to be a lot of FOMO in the market. We've been saying already, if you didn't accumulate low, this is not the time to be FOMOing into spot positions or FOMOing into massive longs. We are at a high time frame resistance. Wait to see what Bitcoin does at this level before making your next decisions. The next one, 32k. 32k is our monthly level of support. If we head over to our monthly chart over here, we can see 32k is going to be that horizontal trend line, which is our monthly base of support. I can go ahead and show you again with this little arrow. Let's draw it in really quickly. Our monthly base of support. Actually, just take a look to the left over here. There's altcoins, 11%, 11%, 12%, 10%. Some altcoins are down 15% like AVAX. So we've seen some pretty big corrections in the last 10, 15 hours, 20 hours, sorry, across the board for altcoins, or Bitcoin only correcting a small amount. So that is that, guys. Now, if we see a breakdown of 32k, that obviously flips that monthly into a weekly downtrend towards 28. How can we potentially foresee a breakdown of 32k? How could we potentially foresee this downtrend developing in the short term, potentially run the risk of losing 32k and flipping that high time frame support? This is where momentum becomes really handy. If we take a look at our RSI over here, we have that RSI uptrend we have been watching for weeks, guys. If we break down from this uptrending level on the RSI, that will signify a loss of high time frame strength and a potential correction lower is coming to 32k. If we lose 32k, we will go lower. So what I'll be watching right now is watch to see if this short-term correction is nothing more than a healthy blip, or whether or not it will develop into a proper high time frame correction and take us to 32k. And the best sign for that will be the breakdown of RSI. If we see the breakdown of RSI, it is highly likely we will head back down to retest these high points at 32,000. Again, that will still be a healthy correction if it occurs. There is no need to be mega bearish while we remain above 32,000. With that being said, guys, let's dive into the short term. So, what are the key levels you should be watching out for? And actually, you know what? Before we look at the key levels, let's look at this. This is going to be our 50 EMA, our market cipher A spread. You can see my settings over here. These are my personal Marcus over A settings. Again, Marcus over A is simply a name for a moving average band, right? It has a bunch of estimated moving averages. These are the personal ones I like and I use. You can copy them down if you like. I just personally have found in the past they give me a nice little spread between high and low moving averages, and I can determine volatility pretty easily using this spread. So let's take a look at what is happening over here, guys. We saw a breakout of the 50 EMA all the way back on October the 15th of October 2023. We have been in a uptrend, okay, an aggressive uptrend for 40%, guys. Crazy. A 40% uptrend ever since that level. We are now for the third time, and I say the third time because we came down and we retested once, we bounced twice, we bounced 3 times is usually where we actually find a little bit of weakness. The third time right over here. If we see that 50 EMA lost, that will signify the price action below the 50 is going to show relative weakness compared to the price action above the 50, which will actually indicate we are in the start, I'll say the start of a downtrend which could develop. This is a very bad sign, particularly due to the fact that it is happening just below this major 38k resistance. It is telling us we have a possible trend reversal developing as exhaustion has been setting into a great enough extent which would prevent the price from pushing higher. It is showing us visually the bears are starting to take control over the bulls. They haven't done so yet, but they're beginning to do so, and it is something you should be watching out for as a warning sign. So let's go back to our key levels. How can we identify this on a structural basis, on a price basis? So we have our highs in. We're at 38k level. We break above that, we go to 40k. Very simple, and there's no need to explain that any further. I'm not going to waste my time on it. Break above 38, we go to 40k, and we'll get very close to 40k. Simple as that. The awesome or the next most important thing is going to be this uptrend, right? This is our uptrending diagonal trend line. If we lose this uptrending diagonal trend line, we will continue lower to the low range of this channel, which is going to be the 33.35 level, okay? If we lose the 50, we are going to retest the 36 and most likely retest the uptrending level of support. This is where it gets very interesting. The uptrending level of support, if retested, is going to be the final level for a bounce for Bitcoin, okay? Before we see a pretty strong correction of 6% towards 33.35. If we take a look at the VRPV, we can actually see a nice little gap developing over here, which lines up with the confluence of our 36k level, okay? So if we do lose this level, we are looking for a continuation lower. Very, very interesting stuff. Definitely pay attention to it. Here's where it gets pretty scary though. If we come down and retest 33.35, we will have this huge chunk of resistance above us and a huge gap below us. Likely, if we retest this area, we will be in a downtrend. So we have weakness retesting the support with resistance above us, negative volatility and negative momentum, which increases the probability of a breakdown. That breakdown could take us to fill the gap at 30,600. Yes, you heard it. That could take us under 32k. Pay attention to the upcoming days, guys. It is going to be very relevant, very important stuff. Now, CPI data has a magical way of impacting the markets. And if we do see CPI data come out a certain way, this could completely shift the direction of the markets on the short term. So, expect volatility, expect sporadic price action. Do not try front run CPI. Do not think or lie to yourself that you can use past data to predict what's likely. We have seen time and time again in the past the CPI data can be completely manipulated, and you're left there thinking, how the hell did they even come to this number? Okay, half the time it's completely pulled out of their head to fit the narrative they want to push at the time. Do not trust CPI data, but take it at face value only when it comes out. Understanding you as a trader, you as an investor, you as a retail individual are the last person to receive that information. Everyone you're trading up against has got that information prior to you. There is literally no reason you should be trading CPI data unless you are a gambler, okay? Wait for the data to pass, wait for the price action to settle down, and then jump back in. Thanks for watching. I hope you all have a fantastic day. Now, before I go, check out the Crypto Academy courses. It is a link down below. There's a 10-unit course. We teach you guys how to trade. We teach you everything you need to know to get up and started with technical analysis and so much more. Thanks for tuning in, and I'll catch you guys tomorrow. Cheers.